All right, what is up? We are back in the saddle again. Today I have actually a kind of a special topic because it's the topic everyone's talking about, and it's about recession, and it's how the top 1% investors get rich during a recession, basically. So if you're not curious about this, you probably should be, because it's very simple things that you could be doing. And good old Warren Buffett understands this really good. Buy when others are fearful, and be fearful when others are greedy, right? And I think it's a very simple saying, but it's so true. And everyone's like pretty fearful right now. Let's try to store as much money as we can, and try to save it in these high yield savings account, because that's not what's going to get you rich, I promise you. So if that was your strategy, I promise you, if you got a bunch of capital in the bank, you are not beating inflation. And you're likely losing capital, even if you are getting 5% at your own bank account. And whether you want to disagree with me, that's fine. I still know that inflation, even though they say it's 1%, it doesn't matter. I guarantee they just know how to, it's called the CPI, not the CPI report, where they report inflation. They're just telling you where they want it to be. So hopefully you go out and spend some more money, right? They want to keep things rolling. So, guys, even with the interest rates, and a tough market, I'm still doing real estate deals in North Dakota. I'm still doing real estate deals everywhere. I'm still talking about building new development. That should be curious to you. But there's really 7 ways that I'm going to talk about in this. And at the end of this, stay tuned to the end, because I'm really going to talk about like exactly what a recession is, like how they know your flow of money, how the 99%, they know where your flow of money is going to go, and they know where it's going to end up in the end, to hopefully, you're going to make the rich richer and the poor get poorer. So I want you to understand what the rich are doing and what the wealthy do with their money during times like these. So you can end up being one of them. And, hopefully you can share this with somebody. Maybe this should help them. This could help anybody. It could help a parent. It could help a grandma. It could help anybody that you want. Please share it. I don't have any ads on this thing. If you're on Instagram, hey, we're just doing this because I love you, and it's free. You can stay here as long as you want, and hopefully ask a question if you guys have any questions about this, because this is a super important topic right now. And you can come out of this thing literally train rolling the competition or train rolling others just by knowing these few simple rules. So let's get into this. Guys, so right now we probably have entered the calm before the storm. So basically everyone's preparing. And if you're not prepared, if you didn't know a recession was coming, you really have not watched the news, or, maybe don't even understand economics, or maybe you don't care. That's fine. That's why you're in the 99%. But, while many are caught off guard, the wealthier, they see the recession's coming. We see the writing on the wall. We see interest rates are rising. You see all these different things happening. It all says that we're in a recession. And they might not guess the exact timeline, but you can see the clear signs. So basically what happened? We printed a bunch of money. We have inflation. They tried to print their way out of COVID, basically. What did that happen? Well, we produced 40% new money on the planet. Like 3 years ago, that money never existed. They printed it all off. Now we have all this inflation because we have 40% new currency. Then what happens? Okay, inflation is soaring because we printed all this money. Oh, guess what? Hey, we're going to have to up interest rates now because, hey, the economy's like really starting to steamroll. Wages are out of control. Food's out of control. Gas is going to get out of control. Lots of things are going to be coming, right? Like you can see the writing on the wall. But you're like, Mark, hey, everything's slowing down now. Like things have stabilized. You are right. So now where are we at in the process? Well, earnings are slowing down, right? You're starting to see these different stocks, right? You can see these big Google stocks and other stocks. Everything's starting to slowing down. Earnings is starting to see what's happening. The high wages and pressures and the lower sales is causing earnings to slow down. And then, hey, maybe we might see housing prices come down. There's also a very valuable thing why you might not see real estate come down. And anyway, that's kind of like the little mini cycle. But number 2, you got to start learning where the bargain assets are. And so the ultra wealthy, they basically know a deal where they see one online. The recession tends to basically undervalue stocks, real estate, and basically businesses in general, because interest rates are high, earnings are coming down, businesses look less valuable. Well, I know Warren Buffett, he knows when to buy, right? Like when things are looking the darkest, but he's like, hey, that's a really freaking good company. There's no way they're going down. It is just because we're in the time we're in, earnings are coming down, I'm going to start buying. So what is he doing? He's not sitting on a hump of cash that most people would dream, like $100 billion. Like, can you fathom some of this money that he's sitting on? And he's just waiting to deploy it. He's like, yep, we're holding interest rates right now. We're at 5.25, sitting there holding. And he's like, at some point, he's going to hit the buy button. And he's getting ready. So yeah, he's plump with cash reserves. You can buy quality assets at a discount, betting on their long-term appreciation. The key is knowing how and where to find the good deals. So, Warren is like the simplest investor. All he does is stocks. Majority of what he does is stocks. He owns Berkshire Hathaway, if you didn't know. And it's just basically a mini, he owns Burlington Northern. He owns all this really stupid stuff. He knew that times were tough and their valuations came way down. And he figured out how to raise enough money to buy a lot of these assets and put them in his holding company called Berkshire Hathaway. And now he sells shares of Berkshire Hathaway, which I don't even know what they're at. They're like ridiculous. And you can about imagine with all his cash right now, when he buys these really good companies that he's looking at, pay attention to what he buys. It's a long-term appreciation. He's always playing the long game. That's why he's very smart, and that's why he's very wealthy. Number 3, guys, harness the power of debt. So recessions force central banks to reduce interest rates to stimulate the economy. So now we're going through the process of a recession. Basically things are the interest rates are going to stay higher for longer. That's what the stock market's dictating. That's why you've seen the stocks come down in the last week. Well, the longer they hold, they're going to hold till they think that inflation is in check, and they will not release this. They might even go up a couple more times. We don't know, but they're going to hold it now. So what's going to happen though? They're going to try. They've literally, 𝗨𝗻𝗆𝗨 said this. He's like, I'm going to wait long enough to where the market's really starting to hurt, and then we're going to drop rates quick and we're going to print money. That's literally what he said. Print more money, cause more inflation. But he's going to make damn sure that CPI is in check, or the 𝗨𝗨, however you want to see that, is in check before he drops rates. And we all know that there's a 2024 election. That's just a quick reminder for everyone. But I think you all know there's a 2024 election, and you know who they're trying to support. So I think you can see the writing on the wall. Probably when rates are going to drop a little bit, or maybe some free checks are going to come out. So just saying, I don't know that for sure. I'm just, that's my opinion. But this is a great time while interest rates are the highest going into like fall, winter. I guarantee January and February are going to feel painful. Why? Because interest rates are really high. There's going to be a lot of less people spending less money. So you might be making less money. You might be in fear of your job, because remember, they will not lower the interest rates until 𝗨𝗆𝗆 says he sees jobs get lost. Basically, he needs people to lose their job. We're at 3.6 unemployment. He wants it at 4.5. Until he sees that happen, he is not going to drop the interest rates. But you will see this happen, and it's already starting to happen. Just remember, and Warren knows this best, some of the best long-term opportunities always come at the ugliest times, right? So people are, he's a buyer when things are really fearful, and he buys the best companies. All right, guys, 4, networking and partnerships. So relationships are everything. Raising capital, whatever it is, during a down market will provide you great times. So guys, I'm trying to raise money right now. I have a deal where I'm letting investors into a 506c if you're accredited. It's called 𝗨𝗻𝗆𝗍𝗍 Crossing. I have 22 townhomes that are already in equitable position, and are stabilized. They're new properties. So if you're interested, DM me the word invest. If you're interested in investing and beating inflation, because I have a 3.85% loan on it, or you could start doing this, start building your own network and start raising your own money. It's very challenging in times like these because everyone's fearful. They're sitting with their money and they're making the most amount of money. I'm making 5% of my dollars. Whether you have 10 grand or 10 million in there, it seems like a lot, but I almost guarantee that you're not beating inflation because they're just lying to us about that actual number. They just skew it. If let's say if they got apples in it at 1 month, when apples come down, they'll go to oranges because they're coming down faster because they just switch. They can just switch what they want to pull in the report itself. So it's all a big lie in my opinion. It's whatever number they want to see and how they're manipulating us to make sure we're moving our money exactly where they want it to. But continually building a network, like if you want to start doing real estate investing yourself, like make sure you have some financial advisors, some accountants, CPAs that a real estate attorneys. Maybe you want to start investing yourself. You want to start raising money. Start building this team of people and get around other real estate investors. I always tell everyone that if you're trying to do everything yourself and trying to flip one home a year, you ain't getting rich. You probably just bought yourself a problem is really what you bought yourself. And it's really hard to flip nowadays because interest rates are so high. If you're going to try and do a 30, 60-day flip, which I wouldn't go any longer than that, you better hope there's buyers on the end of this or be prepared to rent. And most deals, like you need to hook up. If you're going to find deals, like you have to get good about it. Finding leads. You don't want to find everything on market. There is deals on market, but the best deals are off market. That's why I leverage my social media. I said, hey, if you got a deal, bring it to me. Maybe I'm not interested. Maybe it doesn't work for me, but whatever. At least you have a lead now that hasn't hit the market. Maybe another flipper would be like, hey, dude, I got this $100,000 flip. I don't want to do it. I'll sell it to you for 110. Maybe it's a $200,000 property, but you made 10 grand just flipping him the deal. That could be another way to make money. So, guys, number 5, adjust your financial plan. So the strategy that worked during the bull markets isn't the same strategy you want during a recessionary period. So you need to make adjustments, right? Like anyone could have made money in 2020 and 2021. Anybody. And you know how many people had a lot of pain in 22 and even in 23? Almost everybody. Everyone was true millionaires because their stock market was soaring and everyone was making so much freaking money in 21. And then all of a sudden, oh geez, everything's starting to get tight. And now my 401k dropped by 20%, 30%, pre-COVID levels. Like no one thought that was going to happen. It's like smart people just cashed out. This is too frothy for me. Warren wasn't buying anything. And guess who's winning right now? Warren. He just sat on what he had. Now who has all the cash to go buy all these cheap assets? Warren does. But basically, the ultra wealthy, they're going to review a financial plan all the freaking time. They're going to review exactly what he's doing, understand the macroeconomics. You don't need to watch the daily news and the daily spikes of freaking the stock market. I'm telling you, it's not even worth your time. I don't even watch the news. It's just a bunch of negativity anyway. But hire experts for financial advising if you don't know what you're doing. And don't be just on Robinhood day trading. A lot of people lose money on there and they wonder why, because they know how to drop the stock enough where you'll panic sell and then boom, who wins? The institutions win. And adjust your plan. Regularly checking though all your investments. Keep track of it every single day. And just know where you're at, but understand that you're not making adjustments every day. You're thinking, okay, if I buy things today, I'm selling 5 years from now, at least 2 years from now, right? Like we're in an investor's mindset is every 5 years. It's not like, oh, I'm going to buy this now. I'm going to sell it probably next spring. You're trading. You're just making a way to make money. And you're hoping, right? And guys like Warren Buffett are not hoping. They just know like, hey, I buy at these levels. This is stupid. This is the best company. I'm buying it. And then guess what? He's going to hold it for 5 more years. And Berkshire is just going to keep this big compound effect going. And that's why he's successful. So 6, invest heavily in yourself. So I don't see enough people doing this right now. I get asked all the freaking time about Real estate. Hey, how can I get in? Is this a good time? Interest rates are high. Well, guess what? When interest rates come down, guess what's going to happen to real estate? It is going to freaking boom because people are looking to move. Everyone's sitting on cheap debt right now and they can't move. They're locked because they're like, geez, my loan's 2, 3, 4%. I can't even afford to go buy maybe you live in a $600,000 house. I can't even afford to go buy a $400,000 house and it doesn't make any sense. And then I can't get as much money for my house. So what do you do, right? Like you're stuck. So you can about imagine when these interest rates drop a little bit, you're gonna wish you'd have bought more real estate. And if you don't know anything about real estate, I created a course. Basically, I get asked all the time, hey, how do I quickly learn about the real estate game? How do I do this as my own hustle? You know what? I don't want to do it with you. I want to do this myself. And that's how I want to start, but I don't know anything about it. I know I'll just go throw some offers in and, spray and pray. And it's just not a good method. You're going to have probably a really bad time in real estate. You're probably going to get into a flip that takes you way too long. They shouldn't take you 6 months. They shouldn't take you a year, and if you want to learn the game of real estate, I have a course. Just DM me the word course on here and I'll reach out to you and give you the coupon code. Just say you saw it in our live and I'll make sure you get a coupon code that's 25% off. And it literally has like how to find the deal, how to analyze the deal. Is it a good deal? How do you get financing for the deal? How do you close the deal? What do you do after you're done with the deal? Like this is like a 2-hour course. There's 10 different lessons and it literally can show you the whole game. So make sure to take advantage of that. Again, just DM me the word course and say you said it or seen it on the live. I'll make sure that you get 25% off on that. All right, 7. And I don't see nearly enough people doing this. But right now is like the perfect time. Like there's a social media recession going on right now. And I am not a social media expert. I don't know enough about it. I'm giving it my all. I'm trying to provide free value so others share it and hopefully it inspires somebody. That's what I get back from this. I'm not making millions of dollars. I'm not making any money from social media. But what I am making and what I'm talking about is number 7 is building a personal brand. I do get a lot of deals. I do get good connections to other people like-minded that are doing the same things. And we talk about different things. I get on podcasts where I get to talk to like literally experts, multimillionaires, how they did it, how they're doing it. And, if you don't follow our podcast, it's just as awesome as this. Maybe you're hearing this, but make sure you're following us on YouTube or our podcast. Guys, it's just a bunch of free knowledge. You can share it with somebody and it can affect someone's life. So, and it doesn't, really ain't going to grow without you. So, but building a social media brand or personal brand is like the biggest thing that you need to hit. I tried it in 2022. I failed. I just didn't know what I was doing. I was just posting randomly. I didn't have a plan. I was just trying. So now what I've done in 23 is just try to be really intentional. We're doing 135 posts per week across all the platforms. And we're just being really intentional of like trying to provide value, trying to provide actionable tips, trying to be a little controversial on why things, hey, maybe real estate is illiquid, whatever. This is how we combat that. Maybe I don't like stocks. Maybe I don't like Dave Ramsey. Maybe Grant Cardone's wrong. There's different things on building a personal brand. It's just your opinion. It's you. And having an audience, having an email list, and having people reach out to you and ask you, hey, you're the perceived expert. Obviously I spend a lot of time and knowledge on real estate and I try to share that with you on here. But again, guys, building a personal brand is like the biggest thing you're missing out on if you are not dialed into that at least 1 hour a day. Just literally turn the phone around. I don't have a phone, but do a freaking quick message. Hey, I don't have anything to talk about. I don't know. DM me. Let's see if I can help you. But it is definitely something anybody could be doing. You can have your, a W-2 job still. You don't have to be a business owner to be posting on a personal brand. Just, it's the greatest side hustle of 2023. And I think it's very underutilized and people have the time to be doing it right now. It is work, but be intentional with it. I promise you it'll be one of the best things you ever did, especially if you're going into real estate or some other trade. But I want to talk about here at the end, just to wrap this up. I was watching a Meet Kevin episode this weekend, and he's an influencer guy talks about macroeconomics. I look up to him as far as the data that he provides and the information that he provides. I'm not much into economics. Of course, I'm a concrete contractor and general contractor, but he did have good ways to put it. And I think I'm going to say it simply as, we talked about inflation happens, right? They printed a bunch of money. Well, then what did you have? You had interest rates starting to tick up. They're trying to cool off the economy to hold it back down. Well, then guess what happened? Treasuries are skyrocketing, interest rates start skyrocketing. Well, now we're at a point where the metrics are starting to level off, where okay, we're not going up any higher, but it seems like we're holding, but we still need to drop a little bit. So that's why they keep talking about maybe we'll up interest rates a little more. Maybe we'll hold them. We're in this holding pattern. And that's usually how it is. It trickles up and they do this hold pattern. Could be 8 months, could be a year. We don't know. But we do know there's an election, right? And I just like to say that. But somewhere in 24, could be Q3, could be Q2, could be election time. Just saying. And at that point, that's when we're going to start dropping, and we're going to drop fast because we're going to overdo it. They already said they're going to overdo it. So just think about where we're at right now. We are literally in the holding period. It's going to go September, October, November, December, January, February, March, April. So you're going to have about, I'm guessing, 6 to 8 months here of just hold, and then they're going to drop these interest rates. So what's going to happen then? When they start dropping interest rates, guess what's going to go away? Your high yield savings account where you're storing cash. At that point, Mr. Buffett already deployed a lot of capital. During this hold period he's like, this is my buy time. This is recession time, right? And it might be January, it might be March, it might be December. I don't know. At some point, they're going to say, hey, the data keeps coming in low. If it comes in low again, we're going to start dropping. And it's going to happen quick. And your high yield savings accounts are going to go with it. Well, at that point, what is everyone going to pivot to? They're going to pivot to stocks. They're going to say, all right, boom, stock market's starting to climb. Let's jump in. Because you got to think, the stock market is 6 to 9 months in the future, sometimes even 12 months, people say, but I don't know, in the 6 to 9 months where you're sitting right now. So the stock market is literally predicting that April-ish area. And so people right now, the stock market's in the dumps, but I bet you in the next 5-6 months, the stock market's going to be looking euphoric again and going up and up. And everyone's going to be pulling out of those high yield savings accounts, out of treasuries, and they're going to be dumping it into stocks. Well, then guess what else is going to be in a recession? Because real estate is the most lagging effect. You got recession's going to bottom out right at the point when everyone starts dumping. People are going to be dumping real estate to buy stocks. I'm telling you, that's what's going to happen. And around that Q2, Q3 area, it's going to be painful because interest rates are still going to be elevated. Even though they drop, the banks will hold elevation. They're going to want to make the margin, right? Banks are scared right now that we're not going to have enough capital. They're buying capital. They're paying yield for capital. They're paying 5% in some cases. So when real estate starts dipping, it's going to be dipping in Q2, Q3 of 2024. And I think at that point, I don't think home prices are going to go down. There's not enough supply. There just simply isn't. Investors are buying up homes faster than people can. But I believe by Q3 2024, you're going to see a good time. Actually, right now, Q3 2024, you need to do whatever you can to get into some kind of real estate. I promise you will thank me if you did, because by 2025, Q1, Q2, you missed the boat. It might even be Q4 2024. You might have missed. You're going to see interest rates drop. Banks are going to drop rates. Guess what's going to get compressed is cap rates, which means it'll elevate all real estate prices. So guys, make sure you buy that course. If you do not understand real estate, please buy the course. It's like DM me the word course. I'll get you the 25% off, whatever. Maybe we can even get on a call together. You can ask me a bunch of questions. But that would be your best plan of attack. I'm a real estate guy. Warren Buffett's obviously a stock guy. He knows when he's going to buy. It's before real estate truly takes a dump. And everything is already taken a dump, but things are going to get more painful before they get better. So, all right, guys, that's all for this one. Thank you for keeping it real, and we'll see you in the next one.